Hi, this is Carl Weiss from Sceeto, and this is a video response to an email inquiry I got about the move down on Friday, November 16th in the S&P 500. And it was about the pre-market move, or where the market started to move into pre-market. And somebody had asked me what I saw in terms of order flow with regards to that particular turn. Now, the first thing that catches my eye here is wind. I don't know if you know wind, but wind measures, trading bot alignment across the components of the S&P 500. And what we have is wind was really a lot of hard selling in wind. It was baked at negative 100 red from probably moved in at 755, was consistently negative 100 red to 928. So as the market moved up, when you see this much selling in the pre-market and this much selling bot alignment, you know that there's a strong likelihood that the futures are going to have to respond to that. Also, as the market moved higher, I do notice that we have a divergence in between price and MACD. So you have higher highs in price and lower highs in MACD. That's very germane. And what I do notice here is you had some buy programs waning, but price moved up. Buy programs waning, that's BPW. But here at the top, the buy programs waned, but we have a lower high here at 850. And one thing is I always look for, in terms of a down move, a lower high, like a right shoulder, to know that price is also turned. And we had OR, which is orders were replenished. So when we have orders replenished, that specifically means that the orders were replenished at a rate, a frequency, and a sequence that was consistent with prior market turns. It doesn't mean that the orders were replenished, because orders are always being replenished, but it does mean that orders were replenished with this kind of very particular footprint that happens at market turns. And then we see price move down, up, you have a new high in, and here's where you see all this really big bot selling coming in here. And let's see if I can make that a little bit bigger so you can see all the events that are happening. But you'll see a high frequency trading sell surge and an equity high frequency trading reversal. Both red, that's the sell side. Again, down, 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 down. So there's a lot of evidence in this turn that you could catch something like this and feel comfortable riding it down and even adding to a position once you have some profit in the trade. And I do want to point out one other thing right here. Down in the lower pane, we have the white line, which is retail MACD. And if you don't know it, MACD measures order flow momentum off the Globex servers in Chicago. And you'll see here is actually a bit of a divergence between retail and institutional. Right here, it's just a wonderful place to get in. So you have the move up. You think you want to fade it, wait for the lower high. You can get in here or certainly here. And you see a divergence between institutional, which is the green and red line, institutional order flow, and retail order flow. Retail's buying, institutional's going down. And just a great place to get into this trade. So I hope this helps. This is Carl Weiss from Sceeto.
Sceeto's advanced algorithmic order flow data is now available within TradeStation, NinjaTrader, MultiCharts, and Sierra Chart. For more information, please visit www.sceeto.com. This is Cuerva from Sceeto. Happy trading.